Hello, this is Stockbusters. I'm your host, Sandy Franks. The news coming from subprime lenders is frightening. Already, 36 subprime lenders have filed for bankruptcy. I'm sure there are more on the way. If you're not familiar with subprime lenders, then let me fill you in. They are financial lenders who make mortgages available to people with poor credit. In other words, people who don't have the financial wherewithal to take on a mortgage are actually being approved for a home loan. If you think this is an isolated incident, think again. Just this week, stocks retreated as investors grew more concerned that troubles for subprime lenders signal trouble for the economy. Federal bank regulators concerned about a spike in delinquencies and defaults on subprime home mortgages earlier this month called on lenders to exercise caution in making the loans and to strictly evaluate borrowers' ability to repay them. Even the U.S. government is trying to calm fears. On Monday, a Treasury Department official said, "We believe the current situation is manageable." Here with me today is Ian Cooper, who has been watching the activity in the subprime lender market for weeks. In fact, in his service, Death Cross Trader, Ian has been making incredible gains for his subscribers off the subprime lenders using puts and calls. Today, he's going to tell us about a lender he says is devastating to your portfolio. Ian, thanks for joining us.
Thanks for having me.
Now, Ian, the headlines in the news are all about subprime lenders. Is the situation as bad as we think it is?
I think it's worse than what we think it is. We've already seen a significant rise in mortgage delinquencies in 2006 alone. Just yesterday, they came out and said for Q4 2006, there was a 13.3% delinquency rate for subprime loaners. And it's only expected to get worse. As subprime exotic ARMs are reset with higher interest rates, we're seeing a sharp increase in homeowner inability to meet mortgage payments. And it's likely to get much worse as rates on a reported $265 billion in subprime mortgages are scheduled for a reset this year alone. Some of those mortgages could reset up to 12% alone. If the borrowers can't refinance, then we may see even more delinquencies on their part.
Now, Ian, can you give us an idea of just how many homeowners this affects? In other words, how widespread is this problem?
Bad U.S. subprime mortgages are at a 7-year high, forcing more than 2 dozen lenders to close or sell operations. Their woes may contribute to more than 1.5 million Americans losing their homes, another 100,000 people losing their jobs. It's a real problem right now for the subprime mortgage lenders.
I mean, that's a tremendous amount of people you cited that are affected by this.
Absolutely.
Now, you've identified one of these lenders, if I understand correctly, that it maybe was an industry darling, but now it's actually kind of lost its way here and is probably a candidate for bankruptcy?
Absolutely. About a month ago, New Century Financial traded above $30. As of yesterday, it trades under the symbol NEWC on the pink sheets. It closed yesterday at 85 cents on the pink sheets. This was once a $22 billion company trading above 30 in February. As I said, it was just halted with a last traded price of about 84 cents on the pink sheets.
Now, let's just clarify for our viewers, when you're talking about pink sheets, what you mean by that?
They don't qualify to trade on like the NASDAQ or the New York Stock Exchange or things like that. They're considered less quality.
Now, is this problem confined to subprime lenders, or do you think that we might see it spill over to other lenders as well?
You know, it's just not the subprime lenders that need to worry anymore. Alt-A mortgage companies, home builders, things such as that. But Alt-A provide mortgages to borrowers that fall between prime and subprime. They're also at risk. While Alt-A loans are less risky than a subprime loan, as soon as the housing market began to cool and loan volume began to pull back, some Alt-A lenders lowered their lending standards, thereby raising their risk. Over the last 14 months alone, Alt-A default rates has basically doubled. You'd want to stay away from all subprime-related companies and Alt-A companies like IndyMac, which trades under the symbol NDE.
Now, I just want to make sure we're clear on this for our viewers. We have the subprime lenders, and now you're talking about Alt-A lenders.
Right.
What would be the difference between those two?
Well, it's not, there's not a huge difference. You have subprime, which lends money to those with less than perfect credit or very poor credit. And then you have an Alt-A mortgage, which at one time, you have to have, clean credit history. But what was happening as the market cooled off, the housing market cooled off, and mortgage activity started to cool down, they started, expanding who they lent money to. Now these people, they had to have clean credit, but they didn't have to prove, asset ownership or proof of earnings to get these loans.
I gotcha. Okay. Now, Ian, in a recent article I read on Capitol Hill, some mortgage industry executives told lawmakers that the subprime turmoil is a cause for concern, but doesn't warrant government intervention because they believe the financial markets can weed out the problem companies. So do you agree with this assessment? Can Wall Street actually take care of the problem and get rid of these subprime lenders?
Well, yes and no. Right now, the street is serving as a judge, jury, and executioner of subprime companies like New Century Financial, CFC, which is countrywide, and then you have accredited home lenders, which fell from about $20 to $4 yesterday. They're being rightly punished because they were overly aggressive as far as lending. However, the government also cannot allow 2.2 million people to lose their homes because what's happening is that you're also risking about $1 trillion. Subprime loans make up about 1/8 of the $8 trillion housing lending market.
So that could be that rip could be a big ripple.
Absolutely.
Okay, so let's sum it up for viewers. Subprime lenders are bleeding red ink. The problem will probably get worse, and your immediate recommendation is to get rid of New Century and any Alt-A loans.
Absolutely. You don't want to hold New Century Financial. They trade on the pink sheets. You don't want to hold IndyMac. You don't want to hold companies like H&R Block or CFC or accredited home lenders. These are very bad bets right now.
Right. It's time to get them out of there.
Absolutely.
Okay. Thank you, Ian. That's
Thanks
good
for having me.
information. For more details, please feel free to sign up to Ian's free daily e-letter, American Capitalist, that is available here at TaipanFinancialNews.com. Keep your portfolio safe by watching Stockbusters right here at TaipanFinancialNews.com. Thank you for watching. I'll see you again next week.